that.
Credit revenue and debit expenses? Like, did I say backwards?
You probably wouldn't, if you did both of them, it would equal out. It would kind of net out and,
Just kidding.
yeah, so you'd wind up with the same answer.
Yeah.
Well, you could, take out take costs out of cost of goods sold, put them back into inventory and push them down the road.
Ooh, we're getting really warm there. But that's kind of extra fancy. What's a little more crude way?
Don't calculate direct materials or direct labor into the cost of goods sold.
Yeah, that's a little more obvious. But let's deal with expenses first. What if we didn't pay our expenses on time? You kind of delay paying
First year.
until the next year, exactly. That would decrease our expenses. Okay, so there are ways to get to do that. And the other thing companies can do is, when should revenue be recognized? When it's earned. So when is it earned? And so imagine a company that makes software packages to run very specialized machines. Okay, so that's what they sell, and they really kind of sell the package. They sell both the machines and the software to run those. So when is the revenue earned?
When they sell it?
Yeah, when it's shipped would be one alternative, right? When we ship you all the stuff, that's one alternative. When it is physically received by the buying company would be another alternative. Or when it is installed would be another alternative, or when it is both installed and running properly would be a fourth time. So at which of those points in time is revenue earned? And I use that example just to say it's not clear cut. And so if we want to increase revenue, we just kind of sneak in a couple of sales earlier than we might otherwise do so. So am I suggesting you act like this?
Negative.
Thank you. Negative. I am not suggesting you act like this when you are working. But when auditors audit financial statements, they spend the majority of their time auditing the cutoff period for the year, specifically to check for these sorts of transactions. Okay. So is there a temptation to do it? Absolutely, in real life. There's absolutely a temptation to do it in real life. Now, a more sneaky way is really very close to what Brandon said for your first comment, which was, let's put some stuff put some stuff in inventory. And specifically, the costs that we can put in inventory are fixed overhead. And you know how we can do it? All we have to do is make extra units. Because if we make more units than we sell, where do they go? Where do they hang out until they're sold? Finished goods, inventory, right? And more importantly, for every unit that we make, we apply overhead. And so you effectively take overhead out of over or under applied overhead and put it onto the balance sheet. And poof! You get your $1 million. And all you had to do was increase production. Sneaky. Right? Sneaky. Is it in the best interest of the company that you do that? No. Is it ethical or good for you to do that? No. Absolutely not.
And it's more of a short term.
Well, yeah, absolutely. Yeah, absolutely. But of course, your company is at least partly in fault because they're paying you the bonus in the first place. But that's another issue for another day. Because they are indeed motivating you to behave poorly. But anyway, that's what we're going to learn about, right? But that only works, actually, that whole example only works if they're using which financial statement format, if you're being evaluated using which financial statement format. Armando, which do you think? Was it a good quote? What's it say? Dr. Seuss. Was it a good quote? You were just reading it. Dr. Seuss says, "You have brains in your head, you have feet in your shoes, you can steer yourself any direction you choose." Dr. Seuss. So you have to, a company, in order for you to earn your $1 million bonus, this is really important. In order for you to earn your $1 million bonus using the method I just described, unethically, which income statement format must your company be using? Joe? Absorption costing income statement format. That's very important because you can't manipulate income the same way on the variable costing income statement format. Okay? So let's do a problem, shall we? Are you ready? Excited? Matt, are you excited about this? Not Matt. Brett, are you excited about this? It sounds good, man. He's excited to be done with accounting classes for the rest of his life. Except, you know, I've already told you all, I told you all on the first day of class though, right, that if you're successful and you rise up to the division manager, because what's your major? Marketing. If you're successful, you get to be marketing manager and maybe, you know, even a bigger shot, you're going to spend more and more time doing accounting. Just so you know. So study hard. So when you're a good marketer, you know, a good marketing major, salesperson kind of person, that when as you become more important, Gesundheit, as you become more and more important, you're good at this stuff. Because are you going to trust them when your bonus, it's your $1 million on the line? But why hire them when you can do it yourself? Lazy. But oh, let's go to Bowley Company. Bowley Company, if you would, please. Bowley Company. You all are just not an excited group today. And Tyson should be happy because I have not been overusing that phrase. In fact, I've only used it once. I've been counting. Evan, how are you? I'm sorry. So my loud voice isn't helping? I'm sorry. What he's really thinking is, you're killing me, Dr. Fessler. You're killing me. Bowley Company. Bowley Company produces a single product. The cost characteristics of the product and the manufacturing plant for 2005 are given below, okay? So here we got beginning inventory, units produced, units sold, ending inventory. We could put that all in a T account, could we not? Okay. So imagine that T account. It would be balanced. Selling price per unit. Let's do this one first, okay? Let's do this one first, because stereotypically the variable costing income statement format is going to be easier to prepare. So let us do it, shall we? Ashton, do you want to give me a number? For just help me fill in the income statement. And so you can kind of pick any number you want to that looks like it's going to go into the income statement. Because and notice we've got the direct materials, okay? How much?